All right, guys, welcome back for another video. I just want to do a broad rundown on different price action concepts and really just do a broad market overview of Bitcoin right now. So, in order to do that, I really need to look at the weekly chart in Bitcoin. Currently operating around the 200 weekly moving average. Again, it's not really an area where I get too in the weeds with it, whether it's closing above or below. It's really just, is generally going to serve as an accumulation zone. But on the other hand, if you go down to the daily time frame, you do have a break of structure on the daily. You have this series of higher lows. Um, you've got a low right here that was broken. So if you were to, again, this price action right here can be a little bit distracting because you're always going to look up above and get caught up on historical price action. But if you just go like this right here, cut that out, then you can see that, price based off this level right here, the previous all-time high, a little bit lower, and then initiate a new trend, right? An uptrend. You've got, high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. And then this low gets broken here. So there's your break of structure. Now, it is interesting if you guys are, following the FOMC meetings and the different Federal Reserve talking points. You know that the Jackson Hole Symposium is coming up later this week. So Jerome Powell will be talking on this Friday, the 26th. So, a little bit of interesting data coming in right at the end of the week, coming into the weekend. And, what's interesting about that is this area here was the prior FOMC meeting from the July FOMC meeting. We can go down to a 4 hour. You can see here that CPI beat expectations and, volume came in pretty significantly. There's your FOMC meeting right there, your pump. So you've got this FOMC point of origin right here, and you can see that prices come down to that area and based off that area. So, the confluence is kind of interesting going into the Jackson Hole Symposium on Friday. Mm-hmm. Again, the Jackson Hole Symposium is generally a time period where the Federal Reserve has historically made policy shifts and done pivots, and the Fed, has abandoned forward guidance. That was one of the things that was a big deal at the prior FOMC meeting. Them abandoning forward guidance, going to be more data focused. So that kind of, also lends itself to, the idea that, there could be some type of unexpected data release at the Jackson Hole event this Friday. But, again, it doesn't matter. I mean, at the end of the day, we're looking at price action. So, you're at this weekly area where price historically bottoms, but you've got this break of structure on the daily. It's very difficult to work with that and take any type of directional trade in that environment. I mean, it's just not a favorable setup. If I were going to get leverage long, especially, on a trading account, I would want to wait for this to resolve itself. I think, the leverage long position kind of, was invalidated below this level. Now, I was actually taking a weekly trade based off the weekly levels and based off the RSI EMA and just based off this weekly close. So you see the weekly close below that level right here and also close below the RSI EMA. So that trade idea I was looking at on the weekly chart, it's no longer valid. Again, doesn't mean that the world's going to end tomorrow. It just means that that particular trade idea is no longer valid. And, it's time to, manage risk and look for a different setup. So I just want to draw your attention to some of the things I was looking at, different graphics down here. Basically, you have this peak network capitulation. So this is one of the things that is makes it very difficult for me to get bearish looking for high time frame trend continuation, just based off you have this peak network capitulation, and that's Bitcoin denominated realized losses. So basically, you have more realized losses being claimed in the June capitulation than in any time really, in Bitcoin's history. I mean, even if you go back even further, you wouldn't find the same degree of losses. And what's interesting is that these losses all generally occur around that weekly 200 moving average, right? So you've got January 19th, March 2020, June 2022. So just to go back over that, January 19, March 2020, June 2022. Now let's go to the chart. Go to the weekly chart, where the just to show that the weekly 200 comes at the same level. January 2019, March 2020, June 2022. We'll just put that chart back up on the right there just for reference. So you can see that this is generally an area where capitulation hits the market. It's one of the few tools and indicators that I really like, just because it has such a high hit ratio. It's basically undefeated in the big picture. So I do respect that. I do keep that in mind, and it's something that I really don't want to fade that. Um, but again, as I was mentioning before, you do have the break of structure on the daily, so you've got some mixed signals here. And generally, the best trades come when everything aligns, right? When there's a lot of confluence, a lot of different factors lining up with one another. So just going back to this, we can get into some of the energy prices soon. I'll cover this just briefly. This is QuantLab, just talking about the liquid Bitcoin supply. That's rising again. Now, people probably don't care too much for the Bitcoin liquid supply just because it's been rising continuously throughout this downtrend. Um, you know, basically continuously since the market topped back in November 2021. So, people are going to naturally react to that and be like, look, it doesn't have a positive effect on price. It doesn't matter. But I'm not of that group. I'm more of the group where I see this and I see this like, okay, this is a very significant fundamental factor. Remember, supply and demand are the fundamental factors that drive any market. So if you see supply decreasing or becoming illiquid or being held by, uh, you know, market participants who have demonstrated an unwillingness to sell, then that's the same thing as reduced supply. And any market price is fundamentally determined by supply and demand. So assuming demand remains constant and supply keeps coiling up in that way, then it's a fundamental tailwind that's going to, I would imagine, eventually play out pretty dramatically. And I see it as like a spring, right? The more that illiquid supply keeps coiling up, the more dramatic the unwind will be when it ultimately unwinds, especially considering that it's at historic levels. Um, so yeah, so we can jump into some of the more macro concepts right here. Um, Now, the big event that everybody's talking about is, the Fed pivot. When will the Federal Reserve pivot? Um, it's hard to say. It's hard to know exactly what to take seriously that they say and what not to take seriously. This graph is a graph of the Federal Reserve total assets, total balance sheet. So, we were told that in June of this year, they were going to begin tapering their balance sheet significantly. So it's basically the end of August now. It's been 3 months of supposedly quantitative tightening. Only, their balance sheet hasn't tightened at all. And even in the last FOMC meeting, the Federal Reserve used phrases like continue to significantly reduce the size of our balance sheet. Well, they haven't significantly reduced anything. So I don't know if they just don't think people will look at their balance sheet when they say things like that, or what, or if they just lie so much that people I don't know. I don't. I really don't know how they expect people to not look at the balance sheet and say, "Wait a second, you didn't really do the tightening you said you were going to do." Um, so now it's hard to draw on that with any extrapolation to when the Fed will eventually pivot. The Fed, when the Fed pivots, will not have, in my opinion, will not have anything to do with any arbitrary inflation number people like to talk about. They say, that the Fed will not stop until inflation's at whatever number they make up. Well, I mean, inflation, it doesn't work that way. Like we live in an inflationary system, right? And so long as the system persists, inflation will also persist. It may decline in its rate of change for brief periods of time, but you know, in the big picture, it's just going to steadily increase with the passage of time, and that's the rate of change as well. Even if the rate of change declines, you know, briefly or momentarily, eventually it will resume again, because ultimately the government needs to stay solvent. In order to do that, they need to spend more money, issue new debt, and they need to find buyers for that debt, right? And if they can't find organic buyers to, cover their expenses, then they'll tap the Federal Reserve to step in and start buying those bonds to maintain the solvency of the government. And a lot of the government maturities are, getting close to maturity, for lack of a better word. So that that scenario is quickly approaching, and that will ultimately determine the Fed pivot, regardless of what the CPI print is whenever that happens. Um, and then another interesting point right here is this cash and treasuries. So there's sort of a narrative right now that that there's this global tightening policy going on, and that the entire world is being drained of liquidity. I mean, it's very difficult to challenge a narrative when everybody repeats it constantly, because the fact that everybody is saying it gives it credence, right? And pretty smart people are saying it too, you know. But sometimes you'll see data that comes out that directly contradicts a narrative, and data is just data. Data doesn't, it's not biased. It doesn't have an opinion. It doesn't need social approval. It just is what it is. And sometimes data comes out that contradicts a narrative. Depending on how pervasive the narrative is, people will dismiss it, et cetera, et cetera. And this is a case where this kind of challenges the narrative that liquidity is drying up, because it's showing you that the cash assets, and liquidity is just another concept for cash, right? Cash assets held by large commercial banks, plus Treasury and agency securities, which, for lack of a better term, are also cash or categorized similarly on a balance sheet. They're at their peak levels, right? So another way to put that is cash and cash equivalents is at the peak levels. Liquidity and liquidity equivalents are at their peak levels within commercial banks. So this is not a liquidity issue, right? People are having flashbacks to 2008. They're, graphing the current S&P 500 chart against what the S&P 500 did in 2008, you know, and just kind of, associating this moment with that moment to the nth degree. But it's a very different time, right? It's very different because that was the liquidity crisis. We don't have a liquidity crisis right now. Banks have a ton of liquidity. Um, Again, despite what the narrative says, they just objectively do. So I think the situation you have now is, it's not a liquidity problem, but you do have a counterparty risk problem, and the value of collateral is falling pretty rapidly. And generally, what happens when you have an asset deflation or the value of collateral declining rapidly is large banks become extremely picky about who they lend to and how much they lend to that person, just because the collateral is less reliable. Um, anyway, that again, it's not to take a directional position. It's not to say that that the market needs to go up or has to go up or has to do anything. It's just just to demonstrate that maybe the existing narrative isn't accurate. You know, maybe just a little bit. Now, I think the big story is the electricity prices in Europe. This is your French 1 year forward baseload electricity, euros per megawatt hour. So you can see in France, the electricity is going parabolic. Uh, pretty terrible situation in France right now. It's really bad. Uh, the French, well, really everywhere in Europe is struggling with energy costs. France has a significant uh, system of nuclear reactors. But one of the things that had happened to them this summer with their nuclear reactors is they weren't able to run them because when they run them, they need to use river water to cool them. And in the summer, that would cause the river to get too hot and destroy the ecosystem. So they had to turn a lot of those nuclear power plants off. When summer ends, they'll be able to turn some of those nuclear power plants on and enjoy the benefits of that. So they won't be hit as hard by the winter. But France is one of the rare countries in Europe that enjoys that privilege. A lot of other European countries don't, either don't have a nuclear protocol or have banned nuclear completely. So this is your German electricity right here. It's going parabolic, very similar to France, although not as dramatically as France, although still extremely parabolic. So this is just a situation where it's very difficult to find, a valid solution to this problem. I mean, it's almost one of those problems where, that sometimes you're just fucked. Sometimes there's just no way out without significant pain. And, it's very difficult to suggest that without, being labeled as a doom and gloomer. But fundamentally, energy cost is what civilization and humanity runs on. So if that base cost goes parabolic, you have serious issues, and it's not clear how that will be resolved. Hopefully, there's some type of energy innovation breakthrough. I think that's um, the greatest chance. So here's just a this is a pretty good picture. This is the German Energy Ministry. Donald Trump was at a UN event, and he warned Germany that they were too reliant on Russian natural gas. Well, they laughed at him, of course. That's kind of how incompetent the people running Germany are or were at the time. And, it's not like Donald Trump is some genius, right? You don't need to be, he's not a genius at all, but you don't need to be a genius to recognize that, gutting your own domestic energy production and then relying on Russia, who is considered a foreign ally, or excuse me, foreign enemy, even in the best of times, is pretty stupid, right? You don't need to be a genius to realize that. And then you've got these guys, I mean, it's just he just couldn't write a crazier reality than the one where Europe is currently living in. It's really crazy. So fundamentally, that puts downward pressure on the euro. Uh, the Japanese yen is also facing similar downward pressure due to their alliance with the U.S., which forces them not to trade with Russia. And I think this puts downward pressure on the euro and the yen. That's why you see the Dixie going parabolic. Both those. Well, the Dixie is basically uh, a index of the dollar against the euro and the yen for all intents and purposes. And the euro and the yen are both actively engaged in yield curve control, and the dollar isn't. So of course the dollar is going to rise parabolically in relation to them. And just based on the geopolitical, you know, backdrop of what's going on in the world, it doesn't look like that's going to change anytime soon. So, you know, uh, I would imagine that the Dixie, retains its strength for at least a decent amount of time. Of course, anytime you get a parabolic move, you get people piling in on leverage, you get leverage washouts. So you will have brief, as those moves get more powerful, you will get more volatility. But I do think